Hey there, traders. David Floyd here with Aspen Trading Group. I received another Ask Dave question this week, and it's a really good one. It's really comprehensive and tackles a lot of the finer points of trading. So I wanted to share that with you. Hey there, David. I'm going to paraphrase this a little bit. I'll keep it up on the screen here so you can read it. I'm a former customer, stopped trading a few years ago for various reasons. I've been keeping up with your free videos and articles all this time, and now I'm thinking of getting back into it. How much money do you recommend having in both an FX account and a stock account to be able to safely execute those trades? Let's say the overall portfolio is 100 grand. How much money should I start in each account? And then the last nested question is, I've never traded options before. How do you suggest I get started? First of all, it's a great question, Nick. And this is Nick from Aruba. I remember him as being a former client, and definitely look forward to having you back on, Nick. I think you bring up a great point, and obviously you've been reading my commentary to know that when you're placing trades, I think you should be assessing your risk on your portfolio value, not your individual account value. So using the scenario you give, you got a $100,000 portfolio. If you're going to risk, let's say, 1% of that account on a per trade basis, meaning $1,000, you should always be sizing your trades so that if you get stopped out, you're never exceeding $1,000. It doesn't mean you're allocating 1% of your portfolio to the trade. That's incorrect. You're risking 1%. Now that might be 2% for you. Maybe it's a 0.5%. Whatever number you choose, that's a personal preference. I think anywhere from 1 to 2% is a very reasonable amount to risk. So again, going back, what do you need to fund your individual accounts with? Well, as we know, in the FX markets, you do get you have a very favorable account in terms of the leverage afforded to you. And I would say on average, most of our stops in the FX market are anywhere from, say, 75 to 100 pips on a per trade basis on average. So for every standard lot, that's about $750 up to $1,000. And in order to have a standard lot in terms of margin, you're going to need about $2,200 in your account. So I think a good rule of thumb is, based on this particular scenario, you get a 100 grand portfolio, you want to risk 1%. I think you probably have anywhere from $10,000 to $15,000 in your FX account. That allows you to have a couple positions on. If you have a couple losing trades and your account balance goes low or lower, you still have enough in there to fund your next trade. Same logic would be used for futures, and we do a lot of futures trading, primarily in the S&Ps and in 10-year notes. Now the S&Ps, a little bit more margin, almost $7,000 per contract. Treasury notes, 10-year treasury notes, it's about $1,500 a contract. So I think your futures account, depending on which market you're going to be trading more actively, if you're just trading 10-year notes, again, 10 to 15 grand should do it. I think if you're going to be trading S&P futures, you're probably going to need a little bit more money in there. Naturally, stocks, that's a different can of worms altogether. You don't have the same amount of margin afforded to you. So that's going to be the account that's probably going to require the most cash, because you're going to want to buy enough shares to move the needle, so to speak. Again, you're still risking your 1, 2%, whatever that number is that you've agreed upon. So if you're looking to risk $1,000, you've got to buy the appropriate number of shares so that if you get stopped out, you don't exceed that $1,000 of risk, and absent, of course, slippage and whatnot. And then, Nick, lastly, how do you suggest getting started in options? We do trade them. We don't trade them all that often. I think one of the best places to get started is a book by, drawing a blank, The Options Trading Handbook by Tony Saliba. That is probably the best book I would start with. That gives you a really good overview of how to trade options and how to trade spreads, which is typically what we will do here. You can also you can find out more information about that book, as well as a lot of other books that I like regarding trading, by downloading the list. So, Nick, again, I really appreciate your question. Have a great day. I trust this has been helpful.